Hey, how's it going? Curious about how wealthy folks invest their money? Trust me, it's fascinating. Just stick around and watch the video. You won't believe what you'll learn. Welcome to today's video, Luxo lovers. We've got some insider info on the investment that the wealthy are into, and it's not something everyone knows about. But first, we would just want to express our gratitude for you being here with us. Your support means the world, and we're excited to dive into some eye-opening insights. Now let's make this a two-way conversation. Give us a thumbs up, drop a comment, and share this video with your loved ones. And of course, hit that subscribe button and ring that notification bell so you're always in the loop with our latest updates. Alright, let's kick off our chat about the investments of the wealthy with a deep dive into the world of rare and collectible assets. This group of investments is a fascinating one, filled with unique opportunities and treasures waiting to be discovered. These aren't your everyday stocks or bonds. We're talking about things like rare art pieces, collectibles, watches, and of course, everyone's favorite, whiskey and wine. What makes these investments so appealing to the wealthy is their potential for appreciation over time. Unlike traditional assets, the value of rare and collectible items often increases as they become scarcer and more sought after. It's like owning a piece of history that not only brings personal enjoyment, but also the promise of significant financial gains. We've covered some interesting ground, but you know what they say, save the best for last. So stay tuned, Luxo lovers, because we're about to dive deep into those intriguing rare and collectible investments in the latter part of this video. For now, let's dive right into an intriguing topic, buying other people's debt. I know it might sound a bit strange at first, but it's a real thing and it can be quite fascinating. So here's the deal. Sometimes when people owe money like credit card debt or even mortgages, they might find it hard to pay it all off. That's where debt buyers come in. These are often companies or investors who purchase these debts from the original lenders. They do this at a lower price than what's owed, so the person with a debt doesn't have to pay the full amount. Now you might be wondering, why would anyone want to buy someone else's debt? Well, here's the catch. Debt buyers believe they can collect more money from the person who owes by using various strategies. For example, they might negotiate with a person to settle the debt for less than what they originally owed. This way, they make profit. It's a unique way that some folks invest their money, and it's not just about making a buck. Some see it as a way to help people in financial trouble by giving them a chance to get rid of their debt more easily. It's like a win-win for both parties when done right. Let's move on to the second investment, hedge funds. Imagine you have some money to invest and you want it to grow. Instead of doing it all on your own, you can pool your money with a bunch of other investors, and that's what a hedge fund does. It's like a team of investors working together. And you know what? Hedge funds have a bit more freedom compared to regular investments like stocks or bonds. They can try different strategies to make money. Some might bet that a certain company's stock will go up, while others might bet that it will go down. They can even invest in things like real estate or currencies from different countries. Now, the people who manage these hedge funds are often super skilled and experienced. They're like financial wizards and they charge fees for their expertise. When the hedge fund makes money, they get a portion of those profits. It's a bit like a win-win because if they do well, you do well too. Our third topic is investing in emerging markets. So what are these emerging markets anyway? Well, think of them as places where economies are growing and getting stronger, but they're not as developed as countries like the US or Europe. These markets are often found in countries in Asia, Latin America, or Africa. Now, rich folks like to invest their money in these places because they see a lot of potential for growth. It's a bit like getting in on the ground floor of something that's going to be big. Here's how it works. Let's say a wealthy investor believes that a country in Asia is going to become a major player in technology. They might invest their money in companies there that are just starting to take off. As these companies grow and do well, the value of the investments go up. So it's a way for the rich to make money by betting on future success of these emerging markets. But you might wonder, why not just stick to investing in well-established places? Well, that's a good question. The thing is, emerging markets can offer higher returns, but they also come with more risks. The economies in these places can be a bit unpredictable, so it's like a high-risk, high-reward situation. The wealthy can afford to take these risks because they have plenty of money to spare. Alright, let's shift our focus to mineral and water rights. These are intriguing investments that the wealthy often get involved in. Imagine owning a piece of land and beneath the surface there are valuable minerals like oil, gas, or even precious materials like gold or silver. Well, that's where mineral rights come into play. Some rich individuals buy or lease the rights to extract these valuable resources from the land. It's like having a treasure chest hidden underground, and if those minerals are in demand, it can turn into a substantial source of income. Now think about water. It's one of our most essential resources. In some areas, water can be scarce, and that's where water rights come in. Wealthy investors might purchase rights to access and use water from specific sources like rivers, lakes, or underground aquifers. They can sell or lease these rights to industries, agriculture, or even municipalities. It's a bit like being the gatekeeper to a vital resource, and it can be quite profitable. So yeah, Luxo lovers, these investments might sound a bit unusual, but it's all about getting in on valuable resources that the world can't do without. Moving on, let's talk about our fifth investment, private banks. You can think of private banks as the VIP clubs of the banking world. They're not your regular neighborhood banks, they're exclusive and they cater to the super wealthy. Here's how they work. If you've got a substantial amount of money, we're talking millions or more, you can become a client of a private bank. They offer personalized financial services like investment advice, estate planning, and even exclusive access to unique investment opportunities. These banks also provide a level of privacy and discretion that regular banks can't match. That means your financial affairs remain largely confidential. So, when rich individuals have a lot of money to manage, they often turn to private banks for specialized services and that extra level of attention. Alright, let's talk about our sixth investment strategy, rooftop rights. Now this one might sound a bit unexpected, but it's really cool. Imagine you own a building and on top of it, there's a flat rooftop. Well, some wealthy individuals and companies are making money by leasing or renting out the right to use these rooftops. They might set up things like solar panels, cell phone towers, or even rooftop gardens. Here's the deal, in crowded cities, space is a hot commodity, and that includes rooftop space. So rich folks are taking advantage of this by turning their buildings' rooftops into income-generating assets. For example, they might lease space to a cell phone company for their antennas, providing better signal coverage. Or they could use the rooftop for urban farming, growing vegetables, and selling them to local restaurants. It's a unique way to make money while also putting unused space for good use. Before moving on to our rare and collectibles, which we know our dear Luxo lovers are excited about, let's discuss first the investment on square footage for real estate developments. When we talk about square footage, we're basically talking about the size of a space, like a room or building, but measured in square feet. So if you have a room that's 10 feet long and 10 feet wide, that's 100 square feet. Now in the world of real estate, square footage is like gold. Rich investors and developers pay close attention to it because it directly impacts the value of a property. The more square footage a building has, the more potential it has to generate income. So it's not just about how many rooms or floor a building has, it's about the total area in square feet. Investors might buy large plots of land, develop them into buildings, and then rent or sell the space inside based on the square footage. It's a way to maximize profits by making the most of the available space. So when it comes to real estate, square footage is a critical factor that the wealthy consider to make savvy investment decisions. Now, here's the moment many of you Luxo lovers have been waiting for. Our deep dive into rare and collectible investments. But before we get into that, we're curious to hear your thoughts on the first part of the video. Share your thoughts down below, Luxo lovers. Let's make this video interactive and keep the conversation going. Let's start our exploration in rare and collectibles with a captivating world of art. The fine arts industry is like a hidden gem in the world of investment, often attracting those who seek stability during times of economic uncertainty. And believe me, it's not just about beautiful paintings hanging on gallery walls. It's a massive global market poised for remarkable growth. In fact, experts predict that the global value of art is on track to hit a staggering $1 trillion. What makes art an intriguing investment is its ability to withstand economic turbulence. When the stock market takes a tumble or currencies fluctuate wildly, art tends to remain a steadfast store of value. Rich individuals and collectors recognize this, and they're investing in renowned artists' works, such as Picasso or Van Gogh, as well as emerging talent, in the hopes of not only enjoying the beauty of these pieces, but also watching their investments appreciate over time. Now you might wonder, how does one invest in art? Well, it's not just for the elite. You can start small by exploring local art scenes, attending gallery openings, and even considering print or limited edition pieces from promising artists. Or if you're playing in the big leagues, you could go for auction houses like Sotheby's or Christie's, where masterpieces change hands for jaw-dropping prices. The key is to do your research, develop an eye for quality, and remember that the art market can be as much about passion as it is about profit. Alright, let's shift our focus to another exciting investment arena: collectibles. We're talking about stuff like rare books, comic books, toys, stamps, coins, sports gear, sneakers, movie goodies, and trading cards. You might be wondering, why would anyone invest in these things? Well, there's a growing interest in these collectibles, and folks are getting pretty hyped about them. What's cool about collectibles is that there's a demand for them. People are on the lookout for unique and rare items to add to their collections, and they're willing to bid some serious cash for these treasures. Take comic books for example. Some of these old rare issues can fetch a small fortune from passionate collectors. And it's not just comics. Think about vintage toys or special edition sneakers. People are after these goodies and they're willing to pay up. So whether you're into old stamps, shiny coins, or even those limited edition trading cards from your favorite game, there's a world of collectibles out there that can turn into valuable investments. It's like a treasure hunt for grown-ups. Rich folks are also all about high demand, limited supply goodies just like luxury watches and designer purses. I mean, we're talking about stuff that's not just stylish but also a smart investment. Take Rolex watches for instance. These timepieces are like the holy grail of watches, and getting one can feel like winning the lottery. The wealthy often snag a spot on waiting lists to get their hands on these iconic pieces. And guess what? They're not just buying them to tell the time, they're banking on the fact that Rolex watches tend to increase in value over the years. Talk about a win-win. Now let's talk about Hermes Birkin bags. These aren't your everyday handbags, they're a symbol of luxury. And they're as rare as they come. Owning one is like having a piece of fashion history. Rich folks not only carry them with style, but also hold onto them as investments because these bags can appreciate in value over time. So it's not just about having a taste for the finer things, it's about making smart money moves while indulging in a bit of luxury. Last but definitely not the least, a crowd favorite, whiskey and wine. Luxo lovers, these beverages hold a special place in the world of investment, and let me tell you why. To begin, these aren't just drinks, they're investments. You might be wondering, why would rich people invest in something you usually sip or savor? Well, hold on to your glasses because we're about to uncork the secrets. Let's start with whiskey. You know that amber liquid that's been aged in barrels? Well, it turns out, aging whiskey isn't just about making it taste better, it's also about making it more valuable. Some well-aged whiskeys can generate impressive returns, like 10 to 15% every year. That's like your money growing while you wait for the perfect moment to enjoy a sip. Now let's switch gears to wine. Investment-grade wines aren't your everyday bottles you grab off the shelf. These are special, often from renowned vineyards, and they have a unique ability to grow in value over time. The compound annual growth rate for these wines is between 10 and 11%. So when rich folks invest in wine, they're not just stocking up their cellars, they're also building wealth. But why do whiskey and wine become valuable investments? It's partly because of their limited supply. You see, wine and whiskey take time to mature, and there's so much of it in the world. As they age, they become rarer, and that rarity is like gold for collectors and connoisseurs. Plus, there's something delightful about combining pleasure with profit. Rich individuals get to enjoy the flavors and aromas of their whiskey and wine investments while watching their value grow. It's like savoring success one sip at a time. So Luxo lovers, the next time you raise a glass of fine whiskey or wine, remember that it's not just a drink, it's a piece of an investment portfolio. And there you have it, our thrilling journey through the investments that the wealthy dive into, secrets that often fly under the radar. Luxo lovers, we hope you enjoyed this eye-opening exploration. Before we wrap up, let's keep the conversation going. Don't forget to show us some love, hit that like button if you found this video fascinating. Leave your thoughts down in the comments, we want to hear what you think. And share this video with your family and friends because who knows, they might discover something new too. And of course, to stay updated and not miss any of our exciting insights, please subscribe and don't forget to ring that notification bell. Until next time, Luxo lovers, take care and see you in the next video.